Good afternoon. It's Friday, November 9th. I'm George Corrali, and this is the Market Minute, helping you to become a better investor. With the close on October 31st, we've shifted once again to the historically strong season of the market, the November 1st through April 30th period. The seasonally weak period of 2018, in fact, wasn't really weak by any measure. The S&P 500 was up about 2.5%, while the Dow Jones Industrial Average was up about 4%. That's despite a particularly brutal October sell-off, the worst in decades. At the height of the decline, we saw the S&P 500 off by about 12% from its highs, giving back all of its gains for the year. The indicators we follow became deeply oversold, some hitting levels we haven't seen in years. And naturally, investor sentiment became bearish, in fact, too bearish. Many of the indicators we follow fell into what we like to call the green zone or buying zone. Historically, we've seen attractive buying opportunities come from these deeply oversold levels. On October 28th, we posted a new blog entry titled Stock Market Bottom in Sight After Classic Seasonal Adjustment. You can read that piece if you'd like at our website, www.ldstar.com. It's posted to the home page as well as our blog page. So we systematically put capital to work on the big down days of the decline. Since then, the market has found a bottom and rallied strongly, producing a 545-point gain the day after the midterm elections. You know, gridlock is actually not a bad thing as far as the markets are concerned. So where do we go from here? We've discussed seasonality many times over the years. The market often performs far better during the November through April time period than it does from May through October. Although this strategy does have a very strong historical bias to it, it's not a be-all and end-all means of risk management. It isn't easy to know when the market will buck a historical trend, but the odds are in the bull's favor. In fact, there were no down periods 1 year after a midterm election in the post-World War II era. So, for the time being, we continue to see positive signs across the equity market from the indicators we follow. One important note to keep in mind, the market usually tests its prior low before the bottoming process is complete. This can still happen despite favorable seasonal tailwinds. We're monitoring market conditions and your portfolios closely, and we'll be sure to update you if and when needed. Thanks for tuning in to the Market Minute. I'm George Corrali. We'll see you back here soon.